FundStrat's saying that we might be hitting an area of resistance. Do you see that same potential when you look at the technicals yourself?
I do, and that's why I was looking to the side. I'm like, oh shoot, where exactly did the S&P close last night? But I think that that's right. And I think what we've got is we just have a pretty rich valuation right now that's totally in line with, we've talked about before how inflation and market valuations are highly correlated. Right now, where we are in the inflation cycle is total 19, 20 times multiple is completely appropriate. If we think that it's going to be hard for S&P earnings to get above 240, you just don't have much room on the upside. So that sounds really plausible and accurate to me.
All right, with that in mind, Jenny, got to ask you, what is your WEX word of the day?
I'm so excited about this part. All right, I came up with mercurial. And by the way, it took me like all day to think of a good word. I didn't want to disappoint for my first word of the day. But mercurial means subject to sudden or unpredictable changes of mood or mind. And I think that as we enter earnings season, that's what we're going to see.
All right, so we're all about investable moves for today, Jenny. So I know you have some stock picks for us, but I also want to touch on tech just for a second. We don't want to dwell on this too long. XLK hitting an all-time high just yesterday. Do you believe that big tech has more room to run? And then get into your picks after that.
Okay, I don't think so. And you had a guest on earlier who was talking about the number of the FANG stocks that actually have earnings growth rates beneath that of the S&P, and I think that that's really going to come into play. But actually, the reason that I chose mercurial too has to do with big tech. And if we think about Meta, which falls into that big tech group and is up 250%, let's flash back to 9 months ago, not even, right? November, when the stock was trading at $88. Fast forward, we're up 251%. And let's think about what's changed in that time period. Meta is not a company that's changed and improved by 250%. It's not like suddenly earnings or the company are that much better. What's changed is investor perception. And what we need to remember is that investors, Mr. Market, as Ben Graham says, is a mercurial fellow. Depends on what mood he's in when he wakes up and what price he wants to pay. That's how investors are. And they might start to see some of these earnings and be like, well, you know, gee, it's up 251%, up 300%, trading at 59 times or 30 times earnings. I don't want to pay this price.
All right, so earnings might be a bit meh. That's what you're saying. The earnings might be a bit meh, but what are you excited about? Give us a sense of what sectors, what stocks you're looking at.
Okay. So you know me, I'm kind of a wimp, right? And I like to hide out. So what I want is I want stocks that are not subject to the market's mercurial mood. And what I've got for you is Crown Castle, which I added to the portfolio a couple weeks ago, is down 5% yesterday on a downgrade, on an industry-wide downgrade by Citi. And what they own is they own cell towers and small cell networks, and they lease out fiber. They've historically grown earnings and revenues in the high single-digit range. Because of the Sprint T-Mobile merger, those earnings have come down a little bit. And all of the, I think, programmatic trading or really short-term oriented thought process has been like, oh my God, earnings are slowing. They're down to 2 to 3%. That's temporary. They're going to return in a couple of years to high single-digit earnings growth again, and they deserve a premium for that. So right now you get the stock with a 5.7% yield, and they're just going to chunk along because right now I'm calling in on AT&T service. It's necessary. So that's one where I can hide out.
That's kind of a dividend play. That's a bit of a dividend play. One of the other stocks, it's actually a REIT, ticker PSTL. Why are you so excited about this one?
Okay, because again, I'm hiding out from the mercurial moods. But Postal, PSTL, is a small real estate investment trust that owns post offices. So they're backed by the full faith, leases are backed by the full faith and credit of the U.S. government. There's no like, oh my God, commercial real estate, you know, is so scary here. This is really outside of that. And if you want to say, oh, well, post offices are really not relevant anymore, actually the entire infrastructure of package shipping and Amazon shipping is reliant on the backbone of that post office network. So they are essential. They do need to be there. And there you get a 6.3% yield.